Traders. Nathan here together trading. We'll have a quick look at gold, guys. So I've just seen some important levels. And I want to point out a few things short term. The long term, I am not too sure where we are going, guys. I'm not going to sit here and be around the bush. I'm not too sure. I mean, I'm anticipating some risk off into the markets, which should be bullish gold. But then I'm also anticipating some potentially some tapering coming from the Fed. There's one thing I have noticed across the board which is making me think that gold can come down. Two factors here. There's two factors. One is other technical factors. This is the main one here. Got the weekly close tomorrow. Sorry, today at 10 p.m. And we have rejected off the 2011 highs. Significant area, significant if anything. Very, very big level of significance. Sorry, stuttering loads today, guys, but I apologize. But and if we notice, we haven't really, it's higher lows every time as well. So this to me, with this, and another factor is as well, we had the Bank of England this week, we had the Bank of Canada, the Bank of England and the RBNZD, the Royal Bank of New Zealand. And both of them are very hawkish, talking about upping interest rates by as quickly as next year, guys. Now, that's hawkish as anything. That's extremely hawkish. And another thing that I want to point out is as well, and the Royal Bank of Canada is on the same path as well, guys. So I can see a pattern here of the central banks starting to turn more hawkish. Hawkish central banks are no good for gold. No good whatsoever. Gold is it's a risk. It's a risk of commodity. People pile into it when the world's falling apart. Now, what I'm hearing from the central banks when they want to up interest rates is things are going pretty okay. Let's be real, guys. Let's think about this realistically. Gold up past these level of 2000s, saying the world is going to bloody fall to bits and we're going to be living on spam. Do you know what I mean? So I'm just a break above this level here. I mean, if we do break and clear above the 1900 level, then yeah, guys, I expect to probably stay and consolidate above here. But a break above here, guys, I've gone back to the drawing board. I've been thinking about this realistically. The only way above here is if we get big inflation in the markets. And to be fair, we are. But the M2 velocity of money, guys, I spoke about this a few times, is dropping, guys. The money's stagnant. So that's quite deflationary rather than inflationary. So there's a few factors here you've got to think about before saying gold's going to get to all-time highs. Because I'll be honest, at the beginning of the week, I was thinking that. Then I've gone back to the drawing board. I've thought about this logically, and I've thought about this. I've thought about this technically as well, guys. So, I mean, technically, we've got a lovely little ball. We've got a bullish flag pattern here potentially. But we need to break above this level, guys. This 1900 is significant. It's unbelievably significant, guys. So this is one thing going forward. Looking at the technicals here, looking at how the central banks are moving. I mean, gold's had its fun here. We've had a lovely deep retracement here. It's looking very similar to euro, but a lovely deep retracement here, guys. But I'm thinking here, if we do carry on to reject this level, also, so we've got the end of the month as well. So let's even get the month. The month ends on Monday. Now, we just creeped above here on the monthly. It's been rejected ever since this level. This level is a significant area. So, me being the person that I am, not thinking the world is that bad, even though sometimes it is. If we're looking at the central banks across the board, even guys, sorry, I'm going to get up and I'm going to get to one more chart here as well. I'm going to overlay it with gold. Oh, you know what? Let me do that other way around. Let me get the real yields up right now, guys, because the real yields are very important. Real yields are the treasury yield minus inflation, guys. So it's it's the real yield, you know. And let's get this up and let's overlay this with no, it's emerging market index. There we are. Now, I don't want to get put off just saying one candle doesn't mean too much, but with the Fed talking about tapering as well, sorry, nothing else about tapering as well. Tapering will be very, very negative for gold, 100%. And the central banks are, they're not talking about it, but the Fed is it gets brought up. It gets brought up a lot, guys. And I expect the next Fed meeting for them to bring that up again. So the real yields were sort of slowing down on the weekly. Obviously, we've been going down ever since 2018, big time. We're at the March slightly deflationary stage there before selling off big time. But if you notice, we're slowing, guys. Kind of at a pretty critical level here. A break above here and a close above here. We can get some sort of price action like this, and we can actually stay and use this as a support, guys. There's no reason why we can't get back up to this kind of level here, or even break above here, back down to 1. There's no reason whatsoever, guys. And if this is a bottom in pattern forming, especially on the monthly as well, if this is a bottom pattern forming and we can hold this level here, we stay above this level here on the monthly, guys, there is no reason why this can't happen. And this will be extremely bad for gold. This is the real yield, guys. This is extremely bad for gold. Let's even overlay this with gold right now. Complete opposite, guys. And they're both telling me a very similar story, guys. So I was long gold, but now I'm in a state of mind where I'm thinking that gold can come off a bit. I mean, even if we don't get this sort of high, even if we just retest this low here on 1.4, that will bring gold back down to this 1800 level, which I spoke about earlier, which I'll show you again in a minute. So I'm just thinking twice about gold here. I'm trying to paint a picture, guys. We've had a good run in gold, but the 2011 highs rejection tells me a lot. So also let's have a look at US Treasury yield. Let's see this tells a story as well. The monthly here, guys, we can't really see the break, can we? To me, this level's holding here, isn't it? I think we're gonna, as I said to you in the last video, I think we can consolidate here for a while. But to me, upside looks a lot more favorable than the downside, doesn't it? We're sort of rejecting here. But let's see anyway, guys, because the lows of the range here is 1.4. So move down here will be pretty bullish for gold, to be completely honest, guys. So but this is what I'm seeing, guys. This is exactly what I want. But this is what I'm seeing. I'm seeing it, a rejection of these 2011 highs, and the range comes down to here. We could even get 1,000 pip move down here, and it just to come back here. I don't know. I'm playing this for the short term, guys, because we're in a state of change in bias. You can see all around the globe, all around the board. We're in a state of confusion, guys. So I can only speak for what I can see short term in a minute. The medium to long term is still a bit cloudy, guys. So this is what I'm predicting. With the central banks turning more hawkish, and the technical analysis here of us rejecting off the 2012 highs, and gold can come down to 1,000 pips. It's no worries. You can do that in two days. And gold is very volatile at the minute as well, guys. So yes, this is what I am looking at. This is what I can see, guys. I hope this video has helped you. If you want any help whatsoever, just join the Discord channel. It's free. We've got crypto, we've got commodities, we've got FX, we've got everything, guys. We cover everything, guys. So I hope this has helped. I hope this gives you some good insider trading. And yeah, stay safe, and don't forget to use a stop loss and take profit, guys. Don't forget, please. Anyway, have a good weekend, guys. Take care. Bye-bye.